This conference will now be recorded.
So can anyone confirm me what did we do in the last session? Can anyone recall what did we discuss, on which model did we discuss on yesterday? So what are the concepts, like what are the models we have been discussed till now? So if you refer the WhatsApp, you can be able to get to know. So at least can anyone try with that, finding it out what we have been discussed in the last two sessions? So what was the first model we discussed about? It was pharmacy model. Then we had been discussed in the last session with the Toyota franchisee model. And today we are going to add few more inputs in the model. So we have taken with a uh, premium bus service in case if I'm going to run an uh, transport business. So what it could be, what are the types of informations we have to collect it, and we are supposed to find it with the values. So whether to go with this business services or not. So that is what we are going to discuss with. So this is the model, what I have it. So I'll do one thing, I'll just share it to you people on the WhatsApp. Give me a second. So in the last two sessions, what we have discussed, so there we had been taken with the basic sales values and the expenses, and the interest on the loan, the debt we have been brought it through the loan, and on that we have been paid the loan amount, but it was without a debt schedule. So where we had paid only the interest amount, and then we are paid at the end of the period. So when we are going to pay the full amount, so what it could be the rate of return in such cases we have been seen with. So here we are going to add with few more things. So let me add it. So kindly refer your WhatsApp group. So I've been shared the document on the new model what we are going to talk about. It is a Volvo model. So that is nothing but the bus services transportation business. So in case if we are going to take this transportation business, what are the things we have to take care, so that we can be able to get to know that whether we can be able to reach with the expected rate of return. Okay, so let me take it. So hope the screen is visible. Can anyone confirm me? Is that the screen it is visible?
Yes, sir.
Yeah, thank you for the responses. Yes. So here, let me take you to this. So there is a bus which we are going to buy it for the transportation business, where the cost of this bus it is 70 lakhs. So with this vehicle, we are also going to have additional charges like registration fees, insurance, taxes, etc. So since this bus will be used for hiring purpose, so we leave some margin for the accessories that might get added to it. That is, so apart from the default, what the materials it is going to be there, the accessories it is going to be there in the bus. So we may add it for the purpose of using it for the rental purpose. So we are going to add few of the things which is not going to be considered as a charges of investment on the bus. But we are going to spend some money uh, to make that sure that the bus it is going to run it on the road for the services purpose. So for that, additional expenses could go up to 5 lakhs, and the company can incur 10% maintenance cost on the bus on the revenue what you are going to generate it on every year, and that it is going to get increased with 15% every year. Okay, so like this. Due to excessive usage of the bus, it is assumed the life of the bus will be only for 4 years. So we are going to follow with the different types of methodology. We have it on depreciation calculation, but finally we are going to consider the value of calculation on the depreciation will be on the straight line method. Okay. So now the next thing is the company couldn't purchase the bus through its own cash reserves. So it says that you are not going to have the 70 lakhs of rupees in the cash. That is, you are not going to purchase it directly with some directly with the cash, where the company is going to take it 75% of the total cost of the bus on the loan. So the bank is going to charge a rate of interest at 15% with a tenure of loan for 4 years only. So the total we are expecting that the rate of return. So we are going to collect it within 4 years only. The interest rate value if expected to be high as the vehicle will be used for commercial purposes. The repayment schedule is going to constant amount to be paid every year. That is, you are supposed to pay the EAI on every year. So that is principal plus interest amount. So the bank insisted to pay some amount every year, that is EAI. The cost of equity, that is the rate of return, is expected at 20%. So at least 20%. Once the bus service starts, the bus it is going to the total bus seating capacity is 35. So with a load factor of 50%, suppose we can't expect it every day on the every trip. So you are going to expect 50% of the so at least 100% if you are not expected to be filled up on every trip, at least 50% we can expect it. So and the bus mileage what it gives it is 5 kilometers per liter. The total distance, the route which it is going to travel, that is Mumbai to Pune and coming back from there, it is around 155 kilometers. So the time taken for one trip from Mumbai to Pune is 3 hours. So the total working time, it will be 12 hours in a day. That is nothing but the 4 trips. So going and coming, going and coming. Also, other costs to be taken like driver cost is around 600 rupees per trip, and the toll price to be paid is 800 rupees per trip, and other miscellaneous charges, it is going to get charged at 300 rupees. So the miscellaneous cost is included with certain types of info. To generate this revenue, the Volvo bus decides to charge of rupees 350 per person, and due to the change in the value, so let me put it instead of 350, let it be as 350. So 350 per person, and due to inflation they plan to escalate the ticket price by 10%. That means on every year there is an increase of ticket price. 10% it has to be increased. The diesel required by the bus is charged at 94 rupees per liter with the escalation price of 15%. That is, every year it is going to increase with 15%. So the inflation rate also includes the driver cost. That means driver cost and the miscellaneous expenses will also get increased with 15% every year. So evaluate the above proposal of running a premium bus service between Mumbai and Pune, and the tax rate assumed as 5%. The income generated from this business will be invested in some other activities to make an additional income of 5%. So whatever every year we are going to earn some money, so that profit amount will be used for some other investment kind, so that you can earn extra of 5%. Okay. So now all this information I am supposed to feed it up over here. Yes. So what is the cost of the bus? So here it is given as the cost of the bus is 70 lakhs, but to run it on the road, I have to spend this 5 lakhs. So the total cost of the bus, it is going to be at 75 lakhs. So the next thing is maintenance per year. So how much it is going to be spent? So that is 10% on the income. So that is 10%. So how much it increases every year? So it increases with 15%. Then life of bus, it is going to be 4 years. And what could be the depreciation rate in percentage? So every year it is going to get reduced at 25% as per a straight line method. So hope everyone were able to see my screen and able to understand with this. Okay. So the next thing is, so these were the values what we have got it at the time of purchasing the bus. So the next thing is, how did they arrange the money for this? So that is financing related. So the financing, it is 50%. Sorry, it was 75%. So let me confirm. So here it is the loan of 75%, and the remaining is equity, that is the amount what they brought it. Then what is the interest on the debt? So that is 15%. Rate is 15%. Then what is the tenure of the loan? It is going to be 4 years. Then what is the expected cost of equity? That is the return is expected every year at 20%. So on this, the tax it is going to be at 5%. So in the amount wise, what is the debt? So this will be equals to 75 lakhs into the 75%. So that is nothing but 56 lakhs 25,000 rupees. So you have been taken as loan. What is the interest income? So at the end of the year, whatever you earn, how much do you expect it an income on the investment of profit? So it is expected at 5% income. So what is the diesel rate? Rupees per liter, it is 94. So diesel price escalation rate is 15%. So let me check it out. Yes. So escalation rate of diesel is 15%, and the inflation rate on the driver cost and miscellaneous also it is 15%. Okay. So the next. So how do we earn the revenue? So there is a 35 seating capacity. The load factor expected at minimum 50%. So the ticket price is 350, and the escalation rate every year expected that it is going to increase with 10%. So fuel efficiency kilometer per liter. So expected fuel efficiency is 5 kilometers per liter. Driver cost is 600. Miscellaneous is 300, and the toll amount is 800. So let me confirm to you. So driver cost is 600, toll price is 800, and miscellaneous is 300. Then what is the route they travel? So that is Mumbai to Pune. The next, the distance, it is 155 kilometers per side. Then estimated time hour per trip, it is 3 hours, and the total trips per day is 4. That is totally they travel at 12 hours. So every trip it is a 3. So 12 divided by 3, it is going to be 4 trips per day they are going to travel. So this is the values what you are supposed to bring it. Okay. So now by taking this value, you are supposed to calculate it. So I'll do one thing. I'll just add this sheet to you people to calculate it. So which may be helpful to you. Yeah. So now I've added the sheet which has been given with the, so I've given all the basic information. So that sheet it is available for you people. Okay. So now you are supposed to start with the preparation of this income statement. So can anyone try with this given information? How do I generate a revenue in this business? Please guide me. See the values, take a minute of time, and please guide me. How do I calculate the revenue of this business? So is there anyone online who can try with this revenue calculation of this model? Please help me out. So I expect someone to try, even if it is a wrong, no problem. But I want you people to try and give me the revenue value for the year one.
I'm not sure if I am correct in
You
any
try, man.
way,
You try. You try.
but for revenue, sir, it is like for year one we should take like the seating capacity, how many seats are available into
Okay.
the amount for each seat,
Mm-hmm.
into the number of trips or into the times the bus is being operated.
Okay, good. So if I'm going to take it as a 35, the seat numbers, so here I'm going to assume it that load factor is 50%. Good, what you tried. Okay. So out of that 50%, so I'm going to charge the people of rupees 350. So this became one trip. So as you said, so the number of trip it is going to be at 4 trips per day into, so this became 1 day's revenue generation. So here we are going to do it for 1 year. So it is going to be at 365 days. So 35 into 50%. So approximate the people we can expect it. So we are going to charge each of the person 350. So this is 1 day into 4 trip. Sorry, into 350 was for 1 trip, into 4 trips, that is 1 day's collection, into 365 the whole year's collection. So this is going to be 89 lakhs 42,500. So you are going to earn it in the year with the 89 lakhs 42,500. Okay. So now there is a increase in the ticket price at 10%. So how do I calculate this? An increase of 10%. So if there is an increase of 10% on the ticket price, obviously there will be increase of 10% of revenue. You're charging, so you are earning. So how do I calculate this 10% increment from year on year? So instead of giving it everything in the value, I'm going to give it with references. Yeah. So the increase it is going to be getting calculated with the previous year, multiply, open the bracket 1 plus the 10%, and this will remain the same for all the years. Okay. So let me select this and provide the value. Hope you all understood with how did we earn this revenue, how did we calculate this revenue value. So the next thing is other income. So this is has to be calculated only when there is an extra cash with us. If I have a cash balance with me extra, so on that basis I'm going to invest it on something else, and I'm going to earn 5% of the money what I'm going to spend it. Okay. So as of now, I'm not going to calculate this sector because this comes only when I'm done with cash flow statement. So the next, at least you can try this, the fuel cost. So can you try with fuel cost calculation? Can anyone try?
So can you also share the question once, sir?
So can you see the values over here and can you try to find it? Or I'll show you that also. You can just for this. So you can refer this paragraph. So with that, you can also refer this one also. So the same thing I've given in the numbers. The same numbers you can be able to see it over here. So to make it easy for you people, I brought all those text related information over here in this table. So generally fuel, how do we calculate it? How do we calculate within fuel expenses? So
So
yeah, go
is
ahead, go
it
ahead.
like the 1 kilometer? I think here 5 kilometers is 1 liter, right? It takes
Yes,
like
yes,
that.
yes,
So
yes,
totally it travels for 155 kilometers now, sir.
yes,
So
yes.
155 into 5
Okay, is
and
it
in
multiply or divide?
multiplied, sir.
So if you do it like that, so 155 into 5 means, so is it traveling with 155 into 5 calculated value kilometers?
Okay, yes, sir. Yes, sir, it's divided.
Yeah. So first of all, what is the price of the diesel? What is the diesel rate?
94 per liter.
Yes. So 94 rupees per liter into it travels 155 divided by 5. This is what the required diesel for one trip, right? So 94 rupees into how many liters we required. So that is what you are going to get it 155 divided by 5 value. So this is going to cost you for one trip. So what is the value of one trip is 94 rupees into how many liters? So let me put it separately over here so that it may be useful for you to understand. 155 divided by 5. So this gives 31 liters. So 31 liters of diesel is required. So into 94 rupees. So 2,914 rupees you are going to spend it for one trip. Okay. So on this you are also going to travel 4 trips. So 4 trips you are going to spend it. So this is going to be 1 days you are going to have a fuel cost, and this into 365 days. So it is going to cost you 42 lakhs 54,440 rupees. Okay, so let us put it over here. The cost 94 into 155. Let me put in the reference wise. So 94 multiplied 155 distance divided by the fuel efficiency into the number of trips is 4 into 365. So it is going to be costing you at 42 lakhs 54,440 rupees. What you are going to spend it on every year. So on this, you are going to get increased because there is an escalation rate of 15% every year. Okay. So let me take it the previous year into, open the bracket, 1 plus the 15%. So which is fixed every year, which has to be spent. So this is what the fuel cost, what you'll have it every year. Okay. So the next thing is the maintenance expenses. So here I have been said that the maintenance expenses per year, it is 10%. So equals to this into 10%. So now on this, it is going to be increased with 15% on the escalation rate. So how do we calculate it is, so this into 10% into 1 plus 15%, sorry, so there is a 15% increment. Okay, so like this I'm going to calculate it for the other years also. So the next thing is the driver cost. So this will be equals to, the driver cost is 600 rupees per trip into 4 trips into 365. Okay, and this is going to increase every year 15%. If you see here, the figures assumed for the driver cost and miscellaneous expenses, that means the inflation rate is applicable for driver cost and miscellaneous. So 1 plus 15%, which is the same for all the years. So this is going to be the driver cost. So we have found out the driver cost. So the miscellaneous cost equals to 300 into 4 into again the 15% is, oh sorry, it is 365. So miscellaneous is 300 rupees into 4 trips per day into 365 rupees, sorry, 365 days. So on this there is a increment of 15%. Okay, so this is all about the calculation of miscellaneous cost. Now the total amount is going to be equals to 800. So this, it is not going to get increased, so it remains the same. Okay, so I'm going to fix this multiplied by 4. Even this is fixed, and into 365 days. So this amount will be the same for all the years, because there is no increment of charges on toll amount is expected in the other years. Okay, so this is how we have been calculated with all the expenses, operational expenses. So now total of all these expenses will come to equals to sum of, so let me take all the expenses. Okay, so now the gross profit expected with all these activities, it is equals to the revenue minus the cost of revenue. Okay, so now on this there should be a depreciation. So what is the depreciation value is equals to the value of an asset, it is 75 lakhs into 25%. So this I'm going to bring it all over. Then interest expense amount. So the debt schedule, you have to prepare it. So in which we are supposed to get to know that how much interest expenses we are going to have it on every year. Okay, so can anyone help me out? So how to prepare this? So I'm arranging this in a proper format, and I'll share this so that you can use it the same. Yeah, so this is the actual format what it has to be there with. Okay, yes. So what is the value of a debt? So the value of a debt, it is going to be 56 lakhs 25,000. And the next thing is the last year's ending balance. It is going to be the opening balance for the next financial year. The next, what is the function do we use it to calculate the EAI? So can anyone recall it? How did we do the calculation with the EAI? By using which function? Please let me know.
The PMT.
Very good. So can you go ahead, Ma? So equals to
No, no,
PMT.
no.
Yeah. Then rate of interest is, here it is 15%. So which is same all the years. So I'll fix it. Then what is the N per year is? 4 years. Then what is the fund we have taken? So minus 56 lakhs 25,000, comma 0, comma 0. So we are going to get a EMI or EI of 19 lakhs 70,243. Next, so this into the interest. So the interest rate is 15%, which is fixed. Then the principal repaid is EAI value minus interest expenses, and the debt value is at the end of the period, that is beginning minus principal repaid. Okay, so this is going to be the first year's calculation. So now if you have done properly for the first year, so then all the years you can be able to get it automatically the calculated, and the last year's last value, that is end of period debt, it should be 0. Okay, so make sure that EAI value for all the years, it is going to be the same. Okay, so that is what the information what it was there in the document. So you are going to pay the amount on every year with the fixed values. Okay, so that is EAI. Now what is that amount we are supposed to take it from this table towards your interest in the income statement? Means equals to interest expense. So I'll drag this. Okay, so now let us see that the profit before tax. So this will be EBITDA minus depreciation minus interest expense. So it comes with the loss of 14 lakhs, and all the years we are going to have a loss. So here itself we are coming to an end, that we are not going to have any kind of business if I do it with this values. Okay, so by keeping all these values with the loss, is there any possibilities over here I can be able to make any changes so that I can be able to earn a little bit of profit with the expected rate of return. Okay, so I'll just give a break of 5 minutes and I'll come back. And meanwhile, please have a look on all these values. So let me know that which values I can be able to make the changes so that I can be able to make at least few profit as well as the return on investment. Okay, we'll be back at after 5 6 minutes. Thank you all for being online. So can anyone got any kind of a guess so that we can be able to make some profit out of that with any of the small changes over here? Any one changes?
No idea, but could we increase the load factor, sir?
Okay, so load factor it is for the assumption. Good. So let us increase with the price of the ticket. Okay. So we know that when there is a increase of diesel rates, so obviously the first and foremost thing is we can be able to get affected. You might have been experienced or if you have been observed. So in our own society, when we are going to have any kind of increase in the transport, the diesel or petrol prices, you might have been experienced that the cost of an product also it is going to get increased, and your transportations, so auto fare or it could be bus fare, so there will be an effect, right? So let's assume it the people are that many people only who are going to get inside the bus, but there may be chances of getting increased with your ticket prices. So okay, so let us change with this value. So can we have any changes? Let us see. So I'm going to make it as 450 rupees. Okay, so since you are going to make the changes in this cell, and this has affected to all the values. Why? Because this is the way you are supposed to get connected. If you observe here, I have been taken the reference of each cell values. So when you are going to make a small changes in one cell, so it is going to get affected directly to those all the cells. No need to do it anything manually. So this is why I have been asked you people always to use it with the reference rather giving the values manually. Is that clear, ma?
Yes, sir.
Okay, good. So now there is a income tax. You're going to calculate it, which is a 5% equals to whatever you are going to earn into the 5%, and this is going to be fixed value for all the years, and profit after tax will be profit before tax minus profit, sorry, income tax. So this will be the value. Okay, so this is the profit what we can expect it with all these calculations. So let us save this. So now the next thing is the preparation of balance sheet. So this balance sheet, it is going to be prepared first for the assets and the liabilities where it has to make equal. Both should be equal. So let me calculate it for the asset side. Since we have not prepared any cash flow statement values, so let us not give the cash values over here. So as of now, let us keep it as blank. What is the value of an asset? So what is the asset over here? It is the bus. Okay, so this remains the same for all the years. Next, the depreciation. So here it is called as accumulated depreciation. So the depreciation will not start from the year 0. So it will be 0. From the year 1 onwards, how do we calculate it is? So equals to the depreciation value from the profit and loss account plus the previous year of the accumulated depreciation from the balance sheet. Okay. So this it is going to be added with the previous year's depreciations values. So finally, it is going to be equal to the same of the asset value. That means when you are going to keep on using the asset for the period, the specified period, so it is going to be with the 0 value. So the net PP value is gross minus the accumulated depreciation value, and this is going to be 0 at the end of the period. Now the total asset value, it should be equals to, in the future I'm going to calculate the cash, so I'll add with the cash balance plus the net value of an asset. So as of now, since the cash is 0, now if I am going to calculate it, it is going to give the same value as an PPE net value. Okay. So now next thing is the debt. So how much debt do I have it? So at the end of the financial years, so if you see with the debt schedule, so it is going to be this. Okay. So at the end of this, it is going to be like this. Okay. But here what happens? So we are going to apply with the formula with the calculations that the debt values will be calculated as the previous year value minus, okay, so it is current year balance minus the previous year balance of a debt, or we can call it as the liabilities. So the calculation should be like this. So that means equals to the current year minus the previous year. So like this, if you're going to do it, so you can see the observance of this values. It is going to give you the total sum of 56 lakhs 25,000. Okay, so if I take it the direct values, it is going to give you only the balances. But here, what the statement it was, that you are going to clear your loan by the end of the fourth year. Okay, so you are going to give this value like this. Okay, but this calculations has to be given. So you might be seeing it, the calculation of the debt or the liabilities, it will be with this calculation, but it should not be affected directly to the liabilities, in the liabilities of the balance sheet. So it has to be in the cash flow statement. So it is only to make you to be sure that whether are you going to apply this formula in the balance sheet or on the cash flow statement. Okay, so this, it is going to be equity value of 75 lakhs into the 25%. So it remains the same into 25%, and this remains the same for all the years. Then the retained profit, it is going to be 0 in the year 0. Then from the profit and loss account or income statement, you are going to calculate it plus the previous year. So finally, the total liabilities value, it is going to be sum of all the liabilities. Okay, so this is how. So don't get confused. So whatever I said, that the formula, it is going to get applied on cash flow statement. So don't apply it on the balance sheet. Okay, so this is what we are expected to be balanced once we are going to prepare with cash flow statement. Okay, so we have been prepared with the income statement, debt schedule, and the balance sheet. So still the balance sheet is not completed because this is going to depend on your cash flow statement. So hope this has made you to find it, the concepts are going to be more in detail. So the concept by concept, when we are going with, it is going to be little bit of different way of approaching it. Okay, so just try with this. So I'll share all these things to you people. So I've been already shared, but still I'll reshare it once again, this informations with you, so that you can refer this and you can be able to practice on it. Okay, so we will end it for today. We'll meet up in the next class, and we are going to complete the transport model of Volvo buses. Okay, so thank you all. Have a wonderful time.